Hello and welcome to another update video about Bitcoin. Slight downside today, but overall just sideways consolidation on the Bitcoin chart. I'm not going to talk about the entire daily chart again, just to show you we are most likely at the moment in a small wave 4 with support at $34,060. That's really key support. That's the absolute key support level for the current scenario that we're following. There's the yellow count and the white count. In both of them, I would prefer another more direct move to $50,000 plus before we get the next major decision point. Condition is that it's filling in this nice ABC structure here, which I think it's doing right now. Just the C wave down is still missing. Then we will have support around 39.3K, 36.3K, and 34K. And as long as we're holding those levels, or one of them, and we avoid a sustained break below, to be specific, $34,060, that one more high is expected. Essentially, that pattern can take us to all-time highs and also to 100K plus. But there will be, it will be a rocky road. You know, there will be a lot of obstacles along the way. It will not be a straight line. Now, looking at the bigger picture, if that support level breaks, then the larger support will be relevant. And it is between $19,400 and $29,830. Whereas if this really is going to be a B-wave pullback, it might be a little bit deep. But I still add the 38.2 retracement level because we know that cryptos, especially Bitcoin, sometimes in a bullish market, the pullback might be shallow. Just want to show you that level or that range because people ask me, you know, what happens if the first line of support breaks? Let's say we then already are in a B-wave larger pullback. You know, what is the region, for example, to scale in, to accumulate? Now, okay, where you do that, that's entirely up to you. Also depends on your own portfolio. How many Bitcoins do you already have, or fractions of Bitcoin, Satoshis, you know. Because if someone has no exposure, it might even make sense to get a little bit now to at least have some exposure and then just scale up as the market drops. If someone already has a really good average price, I mean, you might not want to increase that average price by dollar cost averaging higher. You know, that again, very, very important to realize that what for some people is a good trade or a good decision might not be such a good decision for other people. Very, very important to understand. Now, looking at the Bitcoin dominance chart, we're about to break that trend line. I don't think it's broken yet, but this is interesting. So obviously on the Bitcoin dominance chart, it's been moving up towards 54%. We are in a corrective rally. That's at least what Elliott Wave would tell us. Now, quick disclaimer here, Elliott Wave on the Bitcoin dominance chart, highly questionable. I still track some structures, but it cannot really be used so well with regards to Fibonacci levels and so on, because there's a limit. You know, it only goes from it only goes up to 100%, and it's not direct sentiment. But nevertheless, I think it can be used. We can recognize some structures. Just take it with a pinch of salt. Either way, the move up seems sort of ready to be finished. Not confirmed that it's finished yet. At least I would like to see a first lower low and a break of the ascending trend line. But if that move down happens, I think the altcoin season is not far away, or maybe it will be the start of a proper altcoin season. So you just want to be positioned, okay? But in the short term, it still allows for further upside, but this pattern is now fairly complete. Looking at the actual Bitcoin chart, really no change to yesterday. So here, Bitcoin is also similar to ETH, still moving. Oh, didn't want to do that. Still moving in this overall ABC structure of a wave 4. So the market came down in an A wave. We have this WXY structure to the upside in a B wave, and my preferred scenario would still be a C wave to the downside into the region between, well, $39,260 to $34,060, $70, depending on the exchange. And essentially that is where it should be heading now. It doesn't need to go down all the way to the lower boundary lines of the support area, but, well, ideally, at least we see a break below the A wave low, which was made here on the 11th of December. And that was around $40,190. And I would like to see, well, even better would be at least touching the 23.6 retracement at $39,260. But first of all, it doesn't give us a clear signal that this increase is over. this Y wave in a larger B wave. So it could still give us one more high towards 44.7, 44.8K. But at some point there we should get rejected. You see already the market is already getting rejected there in the resistance area, but it's not a strong rejection. So we definitely should keep the door open for maybe one more high. That would actually be pretty good, would be ideal before then coming down. But either way, the primary scenario would be for one more low in a C wave here, possibly after one more small high above the Friday highs. Yes, there's also a bullish breakout scenario, which is the white count 1, 2, 3, 4, 5. But then this third wave should stretch a little higher, at least to 45K. To believe it, then we need to hold a wave 4 support and climb even higher. So once we have this pattern, sort of this third wave complete, I would add support for wave 4, for a wave 5. But yeah, it's not a high confidence pattern. It's not my primary scenario. The reason is that it would have to be a diagonal pattern, not an impulse, and these are never highly reliable scenarios. But overall, nothing really new to report here. So I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.